Travis, today we're diving into a heavy topic. What happens to U.S. markets and the broader economy if tension between Iran and Israel escalates into a full-scale war?
Yeah, I mean, these days, Steve, geopolitical risk isn't just the headline issue anymore, is it?
Yeah.
It affects, oil prices, investor behavior, inflation, which then could affect Federal Reserve policy. And in the case of the conflict between Iran and Israel, the ripple effects could be immediate and they could be widespread. I mean, Iran is one of the world's largest oil producers, right? And any disruption in the Persian Gulf, especially near the Strait of, I don't know how to pronounce this word, Hormuz.
I'm glad you had
Yeah, could severely restrict global oil flow, right?
Yeah, roughly 20% of the world's oil supply moves right through that
We should
corridor.
probably figure out how to pronounce it since 20%.
Yeah, that's probably a good point. If that gets threatened or closed, we could see oil spike overnight.
Oh, yeah.
Markets don't like uncertainty, especially in military conflict. Historically, the wars tend to trigger an initial sell-off and then followed by volatility as investors reposition themselves to the environment.
Yeah, I mean, sectors like defense, energy, and commodities, I mean, they might rally here. So they would benefit from a conflict, you would think. But overall, you'd likely see money move out of risk assets. Think, your tech stocks, growth stocks, and then they'd move into safe havens, which you would think like gold, U.S. treasuries, and the U.S. dollar. I mean, the Fed's already walking, a tightrope here between inflation and growth, right? A sudden surge in energy prices certainly could complicate things. I mean, at that point, what do you do? Do you pause rate cuts, hike again to combat imported inflation? I mean, who knows? It's a tough decision. It's a tightrope, right?
It is.
If the U.S. actually supports Israel like militarily or with aid, what does that do? That adds to government spending, further pressuring debt markets, and we're already in a high rate, high debt environment, whether we like it or not.
Yeah, Travis. And so, really, the question is what should investors do with all of this? First thing, don't panic.
Right.
There's no reason. Geopolitical shocks often create short term volatility, but historically, these markets will recover. Second, it's probably time to revisit your portfolio and how it's allocated. Times like these are a reminder of why diversification does matter. If you're overexposed to any one region or sector, then your advisor should just rebalance your portfolio.
Probably shouldn't have been going into it, but yeah,
I agree.
take a look, see what can be done here to shore things up. But bottom line here, Steve, I mean, nowadays, conflict between Iran and Israel isn't a regional issue anymore, right? It's a global one. U.S. markets are going to feel the shock, and so would consumers if oil prices do rise. So, if you have any questions about this, if you're feeling uncertain, as you pointed out, reach out to one of our advisors. And if you have any questions on how it might affect your portfolio, and talk about maybe some of that repositioning, if needed, that you were discussing.
Absolutely, Travis. It's been great. I look forward to it next week.
Look forward to as well.